Good morning. It is Tuesday, February 24th, 2026. This is your daily global briefing. I am your anchor for today, providing a deep dive into the pivotal events that have defined the last 24 hours. We begin our broadcast with a major shift in the political landscape of the Middle East, where the strategic landscape has entered a period of extreme tension. President Trump has officially renewed a 10 to 15-day deadline for the Iranian government to agree to a comprehensive new nuclear deal, a move that comes as the United States military continues a rapid buildup in the region. Reports indicate that the aircraft carrier USS Gerald R. Ford is expected to join the USS Abraham Lincoln in the area, signaling a high-stakes ultimatum that has sent ripples through diplomatic channels. This development follows a period of intense internal pressure in Tehran, where government media has reportedly begun breaking its silence on the possibility of a military conflict, even as widespread protests continue to challenge the internal stability of the Islamic Republic. Simultaneously, the Board of Peace, a newly formed multilateral body, has gained new momentum as Kazakhstan officially joined the initiative, pledging support for a Gaza reconstruction framework that seeks to link regional security with long-term economic growth.
Transitioning from the world of diplomacy to the broader global economy, the narrative is being driven by a historic surge in the World Uncertainty Index, which has reached a 30-year peak. This unprecedented level of instability reflects a simultaneous escalation of geo-economic confrontation and institutional fragmentation at the start of 2026. However, despite this atmosphere of high risk, the International Monetary Fund has maintained a cautious but steady global growth projection of 3.3% for the year. This resilience is largely attributed to front-loaded investment and the adaptability of the private sector in major jurisdictions. Economists are particularly focused on a landmark legal development in Washington, where the United States Supreme Court issued a 6-3 ruling invalidating the administration's use of emergency powers to impose broad trade tariffs. This decision has put approximately $175 billion in collected duties under scrutiny and prompted an immediate response from the White House, which has vowed to invoke alternative federal statutes to maintain a protectionist stance.
In the realm of finance, all eyes are on the Federal Reserve as investors digest the implications of a surprisingly strong start to the 2026 trading year. Following the central bank's recent decision to hold interest rates steady in the range of 3.5 to 3.75%, markets are now closely monitoring for clues on the future trajectory of monetary policy. While inflation has shown signs of a slight cooling, dropping to 2.4% in January, it remains above the Fed's 2% target, reinforcing a data-driven approach that has sidelined hopes for an immediate rate cut in March. This cautious sentiment is being mirrored in the commodities market, where the price of gold has remained elevated as a hedge against record-high global uncertainty. Meanwhile, on Wall Street, the focus is on the resilience of the technology sector, which has seen some volatility as investors weigh the long-term returns of massive artificial intelligence spending against the backdrop of sustained high capital costs.
The technology sector is witnessing a fundamental restructuring as governments and private entities launch massive new initiatives to secure supply chain resilience and AI dominance. In Washington and Seoul, the narrative is dominated by the memory supercycle, as SK Hynix and Samsung Electronics report record demand for high-bandwidth memory chips. The chairman of SK Group recently pledged to significantly boost output to meet the insatiable appetite for AI infrastructure, describing the latest monster chips as the primary driver of current corporate profitability. Simultaneously, Indonesia has signaled its intent to deepen technology cooperation with India, seeking to leverage its vast silica sand reserves to build a domestic semiconductor ecosystem. This regionalization of the tech landscape is being fueled by a projected $650 billion in global AI infrastructure spending for 2026, a scale that is fundamentally redefining the competitive advantage of nations based on their ability to build resilient, localized tech ecosystems.
Finally, we look at the logistics and supply chain networks that serve as the vital arteries of global commerce. The industry is currently managing the combined impact of the Red Sea crisis and a major shift in trade policy. United States Customs and Border Protection has officially announced a halt to the collection of certain emergency tariffs following the Supreme Court's ruling, a move that is expected to trigger a complex web of refund procedures for importers. However, the relief may be short-lived as the administration has already moved to implement new global levies under different trade statutes. In the maritime sector,
shipping lines remain on high alert as the rerouting of vessels around the Cape of Good Hope continues to reduce effective global container capacity by nearly 10%. This logistical whiplash is forcing many organizations to adopt end-to-end supply chain orchestration, utilizing real-time data and predictive modeling to navigate a global trade map that is increasingly defined by geopolitical volatility and environmental constraints. That concludes our global briefing for today. Thank you for joining us.